Testing, testing, testing. All right. ESV, viewer request, Ensco PLC, ordinary shares, and that is on the New York Stock Exchange. Energy, oil, and gas drilling industry. So I have no idea what this is all about. Monthly candle chart. Let's see where a nice top here. Okay, this is the greediest, biggest of patterns. And that target looked like it was reached. Insane. Top pattern, target. Look at that. The closer the pattern, the breakdown pattern to the breakdown line, the shorter the target, the more probable it is to reach its target. After that gives you a target which moves a price action. And look at that, probably a nice symmetry of that. A target to make a bigger pattern. Man, it's all I love when there's symmetry like that. You get out the good place. It reinforces that what I'm looking at, the structure of it, is the pattern is more valid. Sometimes if I have patterns and I have less symmetry, sometimes I didn't choose the right boundaries, the right resistance breakdown lines, etc. But when I see it set up like that, I like it. For profit considerations, my target is before naturally defined support, get triggered out. Profit stop before hitting that support. Okay, so after that, nice top, big pattern, bigger pattern, target reach, stage 2, and we're consolidating right now. All right, a couple of things here. Even if the price action is above the 12-month moving average, it wasn't really starting to incline. So you don't play there, but you don't. These are signs that you're short. The stage 4 is getting close to an end. It's a warning sign, but it's a definite sign that you're in the stage 3. In this case, stage 1, a bottom. And what else do I have? I have some monthly defined resistance here, and here's my support. Yeah, so that's pretty much it. What's my breakout? How long has this lasted? A year? Bottom 2 years, guys. 1, 2, almost 3 years. This is the less greedy of targets. What I like about that target also, I'd have to adjust it. Here's a sideways move. And here you have natural resistance right here at this level. Here you have a wall. Previous support, now turn resistance. You'd have to go through that. So what I'd like to see first here is see how it sets up. If we could get a nice consolidation pattern on 11, the monthly defined resistance, next resistance. And after that, we get a close above that. That'd be great. Consolidation pattern here could also extend to just a little higher defined resistance at 12. And after that, we'd probably play the target of that going up. But what the detail you have to notice is as long all this price action above the 12-month moving average. Now we've been above it for 1, 2, 3, 4, 5, 6, 7. Really starting to create an angle. And that's the trend. That's a higher prevailing trend that Stan talks about. You're building it right here. So you get... It's all a weight of evidence. Bullish targets. You've identified resistance. The trend is going upwards. The price action is above. So this is, if I'd play stage 2 breakout there, this is the setup I'm looking for. A close above $11 right here. Let's head to the weekly. Ichimoku cloud defined support. We're out. right here. Ooh, volume. So right there, when I see the volume, first thing I do is I look at the chart. And yeah, this one here. Horizontal pattern breaking out of. Let me do that. Wait. There you go. Crescendo green volume. Didn't have quite the volume for the breakout. Here a lot of volume, but I don't see where the breakout line is for that. Maybe these candles here. It's hard to tell. Sometimes if you don't have the volume, that's the energy that you want to explode. So it's one of their criteria, a triple confirmation. Make sure you have the volume. If you don't have it, and sometimes, well, it depends. Big stocks, sometimes it's really hard to get twice the average of the previous 4 weeks. So you'd have to look at it in the weight of evidence and see if that's the final criteria. But if we would have had twice the volume, the pullback maybe wouldn't have had it all the way down here. Maybe could have resisted a little bit more or never pulled back at all. So it's all clues, observation that Stan did, and he put in his book. It's all about observations over time. And what do we have here? Don't like that crescendo volume here, red volume. So this is probably going to need just a little bit more time. See, increasing red volumes on those down days. Really testing that 30-week moving average. Really dipping even below that horizontal breakout line. So it's still constructive. We're probably going to see this later on when more candles are added, and we're going to say, oh, look, that was the embryonic breakout of the base, starting to drag the 30-week average higher and higher above Ichimoku cloud defined support. Above all this is like our monthly defined breakout lines. But definitely good beginning, outperforming the SPX. I just probably wait to clear those levels here, or else let's see if really there's a strong sideways move and a really good breakout with really high volume. Then you could probably enter here when it hits that horizontal resistance, monthly defined support. It's going to go back down, and then after that you could probably replay an entry close to that breakout level, close to 30 average. Great risk to reward entry, because you would put your sell stop right here and you'd enter here instead of being far away from the 30 average protecting you. So that's how I could see it happening over the next couple of months for ESV, guys. Definite stage 1. Looking to enter stage 2. We just got to make sure that the weight of evidence is support A++ setup, guys. All right. Thanks for listening.